Hello traders, welcome to the video. So recently I've been busy, with backtesting and some other things. I've not been able to make some videos and show you some things. But today I want to quickly show you one or two things so that you can go back on your chart and backtest and see for yourself. So if you look carefully on my chart, this is the 15 minutes time frame and this is crash 1000. This strategy I want to show you works on volatility index or the volatility index, and it also works on the boom and crash market. You can check out the 500, 900, 600. It works perfectly over there. So and if you look carefully over here, I have just three indicators. I have the envelopes, I have the relative strength index, and I have the moving average inside relative strength index. So before I show you how the strategy works, let me quickly show you settings to my indicator. First thing you do is to click on this indicator icon over here. As said, I have just three indicators: envelopes, relative strength index, and the moving average. To select the envelopes, click on the F icon on the main chart. Envelopes, click on that. Make your period to be 14, shift to be 0, deviation to be 0.10. Method simple, apply to close. For the styles, make it 2 pixel and select color of your choice. After that, click on save. For the relative strength index, click on the F icon on the main chart, scroll down a bit, relative strength index, click on that, make your period to be 1, apply to close, style 1 pixel, select color of your background. If your background is black, select black. If it is white, you select white. For the levels, click on this pen icon, add, type 90, 10 and 50. For the style, 2 pixels, select color of your choice. After that, click on save. For the moving average, click on the F icon on indicators Windows 1, moving average. Make your period to be 10, shift to be 0, method to be exponential, apply to close, style 3 pixels, select color of your choice. After that, click on save. So if you follow my settings correctly, your chart should look exactly as what you see over here. So as we all know that the relative strength index, we have the 90 level and the 10 level, which help us measure the overbought and the oversold level. When the market pushes this moving average into the 90 level, in the main chart, the candles are now overbought. So we anticipate the market is likely to drop soon. Whenever this market pushes this moving average into the 10 level, it indicates that the market is oversold and the market is likely to buy soon. So the buying or selling can be for a short period of time and it can be for a long period of time. It depends on the market. You are not in control of that. So what are we looking for this strategy? We want to be using the logic inside here along with the envelopes to take trades and make some money out of the market. So what we are looking for is we want markets to buy for a long time into a overbought region, which is the 90 level of the RSI. You can see how this moving average enters into the 90 level. So once you have that, then you wait patiently for when market spikes down and go below the envelopes. You will have your sell immediately. Stop loss will be above this high, and then you will hold your trade until when it enters into the 50 level, or you can close some profit here and let the rest run into the 10 level. So you can close some here when you enter a buy here, then you leave the rest to run into the 10 level. You can see it at this point. And this is the buy condition. We are waiting for the markets to go into the oversold region by pushing this moving average into the 10 level. Once you have it enter into the 10 level, then you wait patiently for when this market, the candles, closes above the envelopes. So you can see over here, we have a close here. You can enter a buy, stop loss below this low, and then you will hold your trade until when it enters into the 15 level over here. You can hold your trade until when it enters the 10 level. But sometimes you may not get it as accurate as this. Just try and break even. In case it reverses, you don't lost any amount. So this is boom 500. So it is the same logic over and over again. Here you don't care about the spikes, you only trade what you see. So we can see how market has been falling for a while, dropping to the downside, pushes the moving average into the 10 level. So once you have that, then you zoom in. You can see it at this point, 10 level, spikes to the upside over the envelopes. Enter your buy immediately and put your stop loss below this wick that you see over here. Entry, stop loss, market comes to retest a particular level and then continue to the upside. You can close some of your profits at the 50 level and let the rest run into the 90 level, and then you close all the trade. So that is a buy condition to the upside. And also over here we have a sell condition. Market goes to the downside, pumps to the upside. You can see how it moves very high into the 90 level. So once you have that, you have it dips into the 90 level around this point. If I zoom in, 90 level, if you are very patient and you are precise, you can see here you may think it enters into the 90 level, but if you zoom in, you see that it did not enter into the 90 level. This is where it enters into the 90 level completely. Then you see it sell to the downside. Below the envelopes, enter your sell, stop loss above this high, and then you hold your trade, enter into the 50%, and you let the rest run into the 10%. Some profit here, rest of the profits around this point. Or you can break even and hold your trade and get full profit. But one thing I want you to know is that market can reverse to the upside. We can't say exactly what will happen. We can only predict what is likely to happen. So our edge is our advantage in this market. So this is volatility 25, 15 minutes time frame. It is the same thing over and over and over again. So you can see how market goes to the downside, pushing the moving average into the 10 level. So this is a buy condition. So if I zoom in, 10 level, can you see clearly? Then you wait for when market goes above the envelopes. Here, enter your buy, stop loss below this low, and then you hold your trade until when it enters into the 50 level, or leave the rest to run into the 90 level. Some here, the rest around this point. And immediately you have a sell also, but you just need to be patient so that you don't take wrong trades. Goes below the envelopes, enter your sell, stop loss above this high, and then you leave your profits to run until when it enters into the 10 level. Hope you understand everything I am saying. So it is the same logic over and over again. And if you know that these markets are too choppy, you can go to your 4-hour time frame if you can wait, or the 1-hour time frame. So if you use the 4-hour or 1-hour time frame, you will get more accurate markets. You will get more perfect entries. You can see over here, sell to the downside, pushing the moving average into the 10 level. Spikes above, you can see it how it closes above. Enter your buy, stop loss below this low, hold your trade until when it enters into the 50% around this point, and leave the rest to run into the level. So that is all I want to show you for this video. After this, I want you to go back on your chart, backtest this strategy and test it for at least 2 to 3 weeks. Have more screenshots on your phone so that you will understand when you see likely conditions in the market. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.